the Honorable Larry Kudlow. Larry, are you with us?
Hello, Senator. How are you, sir?
I'm doing great. You're doing great. I watch the Kudlow Report every chance I get. I TiVo it. I look forward to it.
He's always much happier after he watches you,
something big. Well,
green shoots, green sprouts, green something.
You got
which is what he doesn't get at dinner, so he's much happier.
You got a 4-ring circus going there with all those guys, and I'm always shocked when there's not unanimity on the show. Shock. Give us a big picture to start with. The country is facing all this indebtedness. They're talking about a health care bill now that nobody has a clue what's going to cost. My own idea is, a couple of trillion, but nobody knows what the out years will bring. What are the smart guys supposedly? The bond market and so forth. How are people looking? How's the smart money looking at our future? Can you tell?
It's hard to tell. Lord help us. Lord save us from the smart guys, quote unquote.
Yeah.
But I will say this: it's interesting to me that the government bond market, the Treasury market, has not. It's not been damaged by all this borrowing yet, and everybody talks about it. It's a headline issue, and it hasn't happened yet. I mean, Treasuries are trading around 3.5%. They haven't moved. There's a lot of foreign buying. They're taking up the slack. Corporate bonds have done great because the corporations, businesses are getting healthier and more profitable. So everyone talks about it. Nobody likes it, but it has not had much of an impact yet.
Does a lot of it have to do with the fact that we're still the tallest midget in the room?
Yeah, that's fair. I think that here's the deal: when the economy recovers sufficiently, so that there's a lot of new credit demand coming from business, you're going to see interest rates go up a lot more. Right now, no one is borrowing. Consumers are not borrowing, and corporations, businesses are not borrowing. So the Treasury Department, with all the federal spending and borrowing, has a clear, open field. So there's no crowding out. It's going to get much tougher in a year or two when the private sector wants to come in and essentially reclaim the savings that the government is absorbing. But that's down the road. It's probably, I'm going to say, at least a year away.
Well, you're sounding like a politician now, Larry. When you say it's down the road, it doesn't count.
It's going to count, and nobody likes it. But
that's going to bring us higher interest rates, is what you're saying.
It is. There's no question about it. It's just going to take a while. Look, the Federal Reserve has printed all this money. That is going to give us a higher inflation rate in a year or two. But right now, it's too early. And it is interesting. I mean, let me be realistic. The economy is recovering. There's no two ways about it. Today, you had a big increase in the index of industrial production. Went up big, and it wasn't all cars, by the way. It was business equipment and a lot of other things. And we saw a better-than-expected retail sales number yesterday, and the leading indicators have been very strong. The index of leading indicators have been very strong, and as I said earlier, businesses are profitable. So I'm going to tell you that you're going to have probably 4% real economic growth in the next 4 quarters. That's about as far out as I dare to go. But that's what I expect. The stock market is strong. It's up another 100 points today. You had tremendous rout. We are in a bull market in stocks. Make no mistake.
Yep.
And what's happening here, it's not about government. It's mostly about the free market, private enterprise economy making the corrections that it needs to make.
That it always makes.
That's correct, both consumers and businesses. And now the slate is more or less clean. And although there are issues out there, don't get me wrong, we ought to be growing at 8%. That's what happened in the early 80s, the mid-80s.
Well, look, the administration is going to have to hustle to get all the rest of that money out the door and all the rest of those dollars printed in order to be able to take credit for the rebound.
Right. And, I'm sort of baffled by this. I've never understood how these big Keynesian spending programs are supposed to stimulate the economy when all you're doing is borrowing from Peter in order to pay Paul. They're just taking money out of the economy. It's like taking money out of one pocket and putting it in another pocket. And why and how there's a net advantage to the economy, I've never understood it.
Well,
I don't agree with it. And I think it's all Paul Krugman malarkey.
It's all political. Larry, listen, wish we had more time. I appreciate you being with us. You give us excellent insight as usual. Thank you for being with us.